Steve, of course, we still haven't seen that growth target for this year, but how bullish was Vice Premier Liu He?
He was pretty bullish. You know, I've been asking a lot of people that I run into what their outlook for the Chinese economy. Can it be the engine of growth this year if there is going to potentially be recession in the developed economies of the world? I asked Stephen Roach, the former Morgan Stanley Asia chairman, now Yale University senior fellow, on Friday. He said he didn't think so. He didn't think China necessarily would get enough momentum. But Liu He definitely making a pitch to that fact that China will be able to return to upwards of 6%, a higher 5% range as early as this year. This was his pitch to those people you just said gathered there at Davos.
If we work hard enough, we are confident that in 2023, China's growth will most likely return to its normal trend, and China's economy will see a significant improvement, a noticeable increase of imports, more investment by companies, and residential consumption returning back to normal can be expected.
So if you're in the audience there, you're on the fence about whether to invest in China, that might have been the pitch you wanted to hear or didn't want to hear, because he was pretty bullish on a number of different fronts. Let's run through them really quick. Obviously on COVID zero, they've dismantled COVID zero, and they are moving on from that. Essentially, Liu He says, we must open up wider and make it work better. It's a key driver of economic success. Liu He is saying that the peak of this latest wave of COVID infections has now passed, and consumption-related industries have returned to normal. That's might be a little bit of a bullish assessment at this point, but they are gearing up for that National People's Congress in early March, where they will give the full year growth target of likely around 5%. Morgan Stanley, among others, was the latest to up its outlook because of the opening up to 5.7%. You see those other estimates on the screen. They might be altering as the weeks go by. Now, on the private sector, we've been talking about Alibaba a lot over the last week and companies like that who are under regulatory pressure. He has allayed some of the concerns that the central government has been or will continue to put pressure on the platform economy. He says a return to the planned economy was impossible. While common prosperity drive does not mean enforcing strict equality, it requires an entrepreneurial effort. So that's good news as well for all those Western investors perhaps who piled into the ADRs of Chinese companies and have weathered a really bumpy ride over the last couple of years. And on property, another drag on the economy, he reinforced that real estate is a key pillar of the economy and says recent measures to provide funding to embattled developers have led to a, quote, noticeable improvement in supply and demand for houses. Now, spinning it forward, this week we're expected that Liu He, who of course is the top economic czar of China and a key confidant of Xi Jinping, he will be meeting likely with the U.S. Treasury Secretary Janet Yellen at some point. Could be imminent.